Good morning. My name is Ron Morris. This is Moving Forward TV, your local real estate and mortgage update.
And I'm Delynn Gaston. Thanks for joining us.
Interesting article last week in the Wall Street Journal reporting nearly 27% of loan applications were denied. Now, that does not take into consideration clients that meet with loan officers and are told, sorry, you don't have the credit, you don't have the income. Those are not even included in those numbers. These are numbers that basically the loan application was taken, makes it all the way through to an underwriter.
At least 3 weeks into the transaction.
Nearly 1 in 3 are denied. We feel like that's a really, really high number.
Too
Wanted
high.
to let everybody know about that. And they gave 3 top reasons for that. Number 1 would be appraisal. Number 2 would be income. And number 3 would be credit.
And here's where a really good loan officer comes into play, because don't be fooled. Just because it has a big bank name on the business card, don't necessarily assume that means that person has been doing this for as long as the bank has been around or whatever.
Right.
And we're not saying that they're bad, but there's just some inexperienced loan officers out there working at the big banks who might not be able to catch some of these things. And we're telling you these things, and we're bringing these educational videos and things to you because we want your business. Ron and I have both been doing this for a very, very, very long time, and we've been saving deals for a long time, and we can help your clients.
And we specialize in working with first-time home buyers.
Love them.
We're great hand holders. Really, really enjoy working with them. And we're going to be there from actually the pre-approval to the loan application, all the way through the closing. We're going to be there right beside them, holding their hand.
And let's face it, with the few and far between deals that are out there, and I'm not talking about the cash deals, there's cash deals and that's great, but your mortgage buyers that are out there, they are few and far between, and we need every one of them to close so that we can keep our whole economic recovery moving forward for the entire country.
Exactly. So how do we avoid a denied loan application? Let's look at those 3 top reasons. First one is appraisal. Are you aware, as a realtor and your mortgage person, they can dispute or challenge a low appraisal?
Have you ever challenged a low appraisal?
I know I have several times. You don't always win by no means,
right,
but you have that ability to challenge that low appraisal. So please keep that in mind.
Yes. The second reason is the debt to income ratio goes awry somehow or another. And normally that means either obviously something's wrong with the debt of the buyer or something happened with the income of the buyer. Right. Most of the time, it's the debt. No matter how many times we tell them, no matter how many times we explain it, don't go buy anything, don't do anything, don't change anything, don't even go window shopping at Rooms to Go. Inevitably, people do. And something happens and the debt to income ratio goes out of whack. On the flip side of that, the income side, normally not a lot goes wrong with that unless it's a self-employed borrower.
Self-employed definitely presents more hurdles and problems on calculating income. Again, a seasoned loan officer that's used to dealing with self-employed people is really going to do your client a big favor there.
Right, and calculating the income. And then the other thing is sometimes the pay scale gets changed. And again, a seasoned loan officer is going to pick up on that. Maybe you have an inside salesperson who's been on salary for a while, and all of a sudden, somewhere along the line, they switch to commission only.
Yeah, that's a hurdle.
Present problems, right.
Third item is the credit history. And again, credit's credit. If there's a late payment that's made during that loan process, that 30, 45-day window, that could be a real issue there.
Even if it's a little tiny 30-day late on their Sears card or something, that could, because again, not getting into a lot in credit, but the recentness of it is what's going to kill.
And we can't stress enough not to do anything with credit during that loan application process. Don't use it. As Delynn mentioned earlier, don't even go window shopping. Do not use your credit, period, end of story, when you have a loan application in process.
Remember us for your first-time home buyers, or actually for any of the buyers out there who need some hand-holding, because that's what we're good at. And you owe it to yourself to be working with a great mortgage person.
Call us, email us, tweet us, Facebook
us.
He said
tweet! Good for
LinkedIn,
you!
All that social networking stuff. We're out there.
We are, and we know you are too. So put this out on your social networking. And have you noticed the changes? Our show has loaded quicker because we've made some changes to our website. Make sure you check those out. We have a whole new blog page. We have a whole new sponsor page where you can go there and you can see all of the sponsors, because you need all of those people too. So with that, we thank you so much for watching. That's our show this week. We are
Moving Forward. We'll see everybody next week.
Thanks. Bye-bye.
Fire down below. Great number.
Thanks.
Thanks? You didn't write fire down below.
No, but the guy who did had just had a bowl of my chili.